Hello, welcome to this new tutorial where I will be demonstrating two types of entries that you can easily identify and disqualify. So either you identify the entry opportunity or you disqualify the entry opportunity, which means when identifying it, your entry opportunity will play out and you take your entry. While when disqualifying it, your entry opportunity will not play out, so you will not take the entry. These two entries are the two things that happen after a new event forms. So two things that can happen, and when they happen are right, you are taking your entry for the best opportunity to either trade the trend continuation or trade the correction from the start of correction, also called the end of expansion. So either trading trend continuation or trading the start of correction, end of expansion, also the same thing, or the start of a reversal. So let's look at that. Now, starting from this beginning of the day, this tutorial is based on only the events. In this case, only the R03 or G3 events. So R03 plus 1 event or G3 plus 1 event. We will not look at all other things here, since each of those things are things we have already covered in other tutorials. So now let's pay attention to this very observation for identifying and disqualifying your entries. So now, when we have an event like this, we easily see this as a G3 plus 1 event. So let's say this is what we have exactly right now. So everything that has played out is what we are waiting to see how it happens. So there are two things to do here. One is trading the trend continuation. And this one happens afterwards, okay? Then trading the trend reversal or correction start. So which one should come first? I think correction start comes first, where the opportunity is given. Then reversal or trend continuation comes next. So let's look at it. Now, this was an uptrend. Okay. So we want to see the possibility for the market returning to correct the full move of this event. So since the event direction was upward, the correction will be downward. And we know what correction means. Correction means recovering the full move of the impulse. That's what correction means. So now let's look at it. This is where the event ended with the break. Then the rule for trading correction, which is identifying the correction starts, is to watch for the market entering into what we call an expansion, and then returning from expansion into the trend continuation level, which is an indication of correction. Okay, so when the market returns from expansion into the trend continuation level, which also is into the consolidation zone, what that gives you is a correction entry opportunity. So that is what we are watching at here. First, we want to see market breaking the TH in this case by the first 10 pips. So if TH is at 2291.72, the first 10 pips will be 2292.72. Let's see. So the market exceeds 10 pips here, which means the market entered into an expansion correctly. So I haven't gone to 2292. point, let's look at that, 0.72. So 2292.72. We now place our first stop order for a correction entry. And since correction is to take the price downward, we are going to place a sell stop. And that will be 1 pip below the TH because we are trading to sell. So 1 pip below the TH. So here, the market makes it, at this point, we'll place the sell stop down here. The moment the market makes it to 2292.72, we place the sell stop down here and wait. So now while waiting, the market comes from the top, which is now end of correction. Okay, sorry, which is now end of expansion. Okay, the market now comes down. All right, market now comes down and does what? Break the TH, meets the entry, activates the entry. Comes down in an attempt at going into full correction yet, but reverses and goes back up, breaks the TH and all of that. Okay, but stays within the entry zone. So stays within the entry zone. Now remember that we said this is end of expansion. We already projected the expansion when the event formed. So this was using the Fib expansion tool. We placed it first at the ISL, dragged it next to the TH or TCL, and then drag the last part to the CROL. That's how we get the expansion. Okay, so we have now expansion levels. We have expansion level 100, expansion level 161.8, and expansion level 61.8, expansion level 100, expansion level 161.8. So that is what we have. Now, this is where the level started from for this. The level started at 61.8, as you can see, where the expansion tools line is beginning from, showing you that its respect is for this very expansion tool here. So started from 61.8, then the second level 100. So you see the market did not go into all the expansion. So that is why when we are trading end of expansion, we want to see how quickly the market returns into the trend continuation level. And that is what happened. The market returns quickly into the trend continuation level before even going to the first expansion level, which is the 61.8 expansion level, and activates the entry. Having not gone into any of the expansion levels yet, or also called expansion limits, the entry now activated can be held up until the market comes down to the ISL of that event. So this first entry opportunity identified has been traded successfully because that is a correction. So the entry is taken from the start when the market returns into the consolidation zone, having broken the TCL for the first time. In this case, for a G3 plus one event, the TCL is also called the TH, that is called trend high. Then while for an R3 plus one event, the TCL is also called the TL, and that is trend low. So for the first observation, the identification of the entry opportunity was exact. We got an entry taken from, let's point that level, drag it down to here. So this is where we found the entry. And where did the profit come in? When the market went to the full level to hit the ISL. So let's mark it from entry level 2291. Okay, then to profit level 2285, that's 60 pips or thereabout. So that's about 60 pips. So 2291, that's about 60 pips taken. Then now for that being the correction entry, okay, that's the correction entry, correction start entry, which is also the end of expansion entry. end of expansion entry. And then if the trend is actually opposite, it will also become the reversal entry. So you can see the correction entry is also the end of expansion entry and also the reversal entry, depending on where the trend is. For it to become a reversal entry, it means that the trend should be in the direction of correction. That is what that means. So now we got the first one. Now the next entry rule is to trade for this same event which has concluded, to trade for this same event which has been corrected, the market going back to continue the trend. So how do you know that the market will go back to continue the trend? That is what you want to disqualify or qualify or identify rather. Now look at this. The market will have to come to the ISL, test the ISL, reject the ISL, even possibly break the ISL, but return back into the ISL and move back to the CRL. On the market's return to the CRL, then you find your entry taken from the CRL all the way into the consolidation box. So your entry taken from the CRL all the way into the consolidation box. So as wide as that would be, you have your first entry at 1 pip from the CRL. In this case, since it's a continuation for an upward move, the expectation is you to buy. So if CRL is 2291.17, 1 pip on that will be 2291.27. So let's see. That would be your buy entry. And you can see that the market did not come back into that. So it means that the upward direction here is disqualified. Upward direction here is what? Disqualified. So that having been said, what's the next thing to look at? Since the market did not qualify the move, and remember this sell was taken successfully for the correction, identifying the correction and disqualifying the trend continuation. That is what's played out here. So now we look for the next event that formed and do the same thing and see what would happen. So this is the next event that formed, which was an event that formed in the correction of the previous event. So this event formed in the correction of the previous J3 event. And this new event is an arrow 3 plus 1 event. So doing exactly the same thing. Let's first of all place our tool from the ISL to the CROL, ISL to CROL, and drag the remaining part of the tool to the TCL of this very event. Okay, let's place it correctly since we have seen the two. This is the TCL, and the last part of the two we drag to the CRO. So that's to show us the levels of, in this case, we are always doing this to show the possible expansion of this new event. So every new event is an event that stands out on its own. So I haven't done the projection of expansion downward. We want to see how far the market will expand for this new event that formed, even though this event formed as a correction of the previous event. So the first thing to do again is the possible possible move in the direction of correction. So possible move in the direction of correction. And what are we correcting? Correction of this event. Okay? Correction of this arrow 3 plus 1 event. So what is the rule again? We want to see the market enter into an expansion of this new event by the first 10 pips and then return from that expansion. Okay? Return from that expansion into the consolidation box. So where is the next 10 pips from 2286.25 to 2285.25? This was where the market made the move, 2285.25. The market returns on the same candle and activates the correction entry. Okay, activates the correction entry, but what happened? The market does partial correction, fails to continue the correction, and then returning backward, it breaks the limit, which in this case is just 10 pips SL. We are always using 10 pips SL for correction entries. So because once the market has made that correction, activated the correction entry, it is expected to either make the correction, or if it's not interested in making a correction, returning downward means there is no need to hold on to a correction bias, because the correction bias is itself counter to the possible trend, because the trend is expected to be in the direction of the event itself or impulse, as the case may be. So if the trend is expected to be in the direction of impulse, what is the impulse here is a downward impulse. So which means that the trend could be downward. So there is no need extending the SL beyond 10 pips from entry level, which in this case is a trend low. Remember, for the R3 plus 1 event, the TCL is also called the TL or trend low. So this resulted in a loss, which was a 10 pips loss for identifying, the possible start of correction. So first move to correct failed, and 10 pips was lost. Where was that loss taken? At the point the market returned back on this candle, this bearish candle, into the SL. Okay, that entry is dissolved automatically. So that being taken, the next consideration is for the next event, either for the next event or, again, remember, identifying or disqualifying the trend continuation. And what's the rule for trend continuation? You want to see the market go to test the ISL, reject it, and return into the consolidation zone. Return into the consolidation zone, which will now activate your trend continuation entries. So in this case, there was no correction, which means that we are now disqualifying the continuation entry. So no continuation entry in this case. So for this very event, no continuation entry was traded. Now that having been disqualified, so we have done identifying start of correction entry and disqualifying continuation entry, trend continuation entry. While in the previous event, we did identifying again the correction starts entry, and we disqualify the continuation. So there was no continuation upward. And in this case also, we did not have a continuation downward that met the entry requirement, which would have been that it should go to correct and reject the ISL. So move from CROL to ISL, okay, which did not happen. Now let's move to the next event. The next event finally forms, and having formed the next event, we are going to use exactly the same principle. So going by our next principle and sticking with it, we have again, remember that the simple tool we are using to apply to track expansion is the FIP tool. We'll place one part of it at the ISL. So FIB expansion to the second part of it at the TCL, and the last part of it at the CROL. So that will now show us the direction of expansion. So now, first thing we want to see is market going into expansion and returning from expansion to give us our correction starts entry. So what happens in this case? The market did not even come again, haven't formed the TL, did not come again to the TL. So here, in trying to identify the correction start, we've disqualified that. So there was no correction start entry meeting our rule. So that meant that we have disqualified the correction start entry. Okay? So whatever happens next will now be us waiting to identify, in this case, the market corrected. So let's clarify that the market corrected without giving us a correction start entry. That's what we are saying. We didn't say that there was no correction at all. We are saying the market corrected without giving us a correction start entry based on our rule. So what's our rule again for correction start entry? That the market should break the TCL and break it by 10 pips, return back into the TCL, okay, to activate the entry for correction. So, which will now be held up until the correction goes to the ISL. So, but that did not happen. That's why we have disqualified the correction start entry. Now, for our next observation, we have seen the market done a correction that did not give us an entry opportunity based on this rule. Then I haven't seen the correction. We are waiting for the market to come and give us the trend continuation level entry. But what happens? The market tries to come down, but failed to penetrate the CROL. Good listen. And by not penetrating the CROL means that we are not having the trend continuation entry, which means that we are not seeing a trend going downward further. So which means disqualified, we have disqualified the correction start entry, which was not given, and I've also disqualified the trend continuation entry. So trend continuation entry has also been disqualified. So for this event, two entries following our rules have been disqualified. Two entries following our rules were disqualified, but the correction start entry and the trend continuation entry both were disqualified for this event. So far we've only had one successful event traded for 60 pips profit, one unsuccessful event traded with 10 pips loss, and now the third event not traded. So either way is not traded. Now we have a new event that formed here. So for the new event again, remember our rule has to be followed. Here we already have the Fibonacci expansion tool already applied from ISL to TCL and dragged to the CRL. So what are we looking at again? We want to identify first is our correction entry, correction start entry. And the rule again says that the market should break the TCL by the first 10 pips and return back to the TCL. But what happened here? The market did not even go back to the TCL. The market began a correction, started a correction, and got to the end of correction. Okay? Market got to the end of correction. So now, for identifying correction, we rather disqualified correction start entry. So we did not get a correction start entry. So now that we have disqualified correction start entry, we are now going to try to identify what? The trend continuation entry. And for the rule of trend continuation entry, we say we want to see the market do what? Want to see the market return back from the ISL, whether broken or tested and rejected. We want to see the market return back from the ISL into the consolidation box by breaking the CRL to activate our first entry. I know we have multiple entries when trading the trend continuation. So it means that in trying to identify the trend continuation entry, we are going to place a buy stop once the market has come to the ISL of the event we are observing. So here, what did the market do? The market, of course, comes to the ISL. So let's observe where we take our entry from here. Okay, so let's observe where we take our entry from. Here, the market comes deep into our entry to activate our trend continuation entry in this case, picking our buy stop entries, pick our first entry at 228 from CROL, one pip from CROL, one pip on CROL, so 2288.74. Pick our first entry, then second entry will be 2289.74. So no second entry, we'll pick our first entry, and that is our highest entry. That's our highest entry at 0.04, of course. But remember that we are placing these entries within the consolidation box. So it depends on how wide the consolidation box is. We'll know how many entries will be taken starting from the highest loss size we are trading with. So now the market picks our entry and rejects the TCL or TH in this case, comes down. So here we are using the full 40 pips because this is a trend entry. So trend entry, we are taking a full 40 pips of our stop loss. So 2288.7, 2288.7 to 2284.7. That's our stop loss. So the market comes down 20 pips, draw down, and doesn't come to the stop loss, then goes up, picks the next entry at 2289.71. Okay, so that's how far we can go. We only have two entries here. Then here we are going to be holding for 100 pips full circle move because it's trend continuation. 100 pips full circle move. Now, when this happens, remember that the moment we see this market activate our entry, we are now going to do what we call the channel projection to see how far the market can go. So let's project here. We already have the channel to applied here from the ISL to the TCL. So the projection shows us that 61.8 level is up there, 100 up there, 161 is also up there. Then we have 261 also up there. So the market can go all this way high. And what happened for our two entries taken in this case, the market goes all the way up to a full profit. So let's look at what is our take profit. Take profit from first entry at 2288.71. 2288.71. Okay, that's not our first entry. Or is that our okay, that's our first entry. But starting the calculation from the TL, the entry at the TL, that's 2289.71 because we have to have 100 pips in all entries. So 2289 to 2299.71. So did the market get there? The market goes to 2299.71. That's full profit on that event traded for the two entries. So remember, we're using 0.04 and 0.03 because those are the only two entries that fall within the scope of our consolidation box here. So that's 40 pips plus that's $40 plus $30 are $70. We just achieved that, and that's a cumulative of 200 pips. 200 pips trading 0.04 and 0.03 in this entry. So here we disqualified the entry opportunity for trading correction start, but we qualified, okay? We qualified or identified the entry opportunity for trading trend continuation. And that is what gave us our entry here. So now we look for the next event that we see, which now we come to the next event here. We see the next event here. So following again the same thing we have done before or previously, we are going to start by using our Fibonacci expansion tool, drag it from the ISL to the TCL and the last part to the CROL. then we'll see how far the market can expand. Okay, why do we use expansion tool first? Because we are not immediately sure of the direction of trend following the event. The market could be in an expansion and we might be thinking it's a trend. So we first of all have to look at the possibility for an expansion before we start looking for possibility for trend. That is why we do the correction first based on end of expansion, okay? And then we now do the trend continuation where we have traded the expansion successfully. We now look at the possibility for the market reversing back into trend, which now shows us that we are now in a trend move. So after correction comes reversal. That is why we do trading correction first before trading the trend or reversal back into trend. So here is an event that has not played out yet. And even though, yes, if we get our chart back live, we might come to see whether or not, okay, so there will be no network to load the chart to come back live for that. So that is one of the strategies we have for identifying and qualifying entries, identifying and disqualifying entries based on the event itself. So this tutorial is important when we are not looking at all other entry rules. We can simply do this all the time and find our safe entries. Find our safe entries based on this demonstration of how to identify and disqualify entries. So that will be all for now. And we hope that as we keep applying all of these lessons, we'll improve our trade performance and achieve consistency in profitability. That will be all for now. All right.